Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. It was another status quo day in this bull market, this 2013 bull market. The market finished with modest gains, but continued to extend to the upside, made new all-time highs, followed the lead of world markets that were higher overnight after Janet Yellen's confirmation hearing yesterday that made it clear that she is as dovish, if not more dovish, than current Fed Chairman Ben Bernanke, and she looks set to continue the dovish monetary policies of the Fed, if not be a little bit more aggressive in supporting the economy, one thing that she talked about yesterday. So not a lot, when we talk about obstacles for the market, we've had all kinds of fiscal policy issues, government shutdowns and debt ceilings and fiscal cliffs and the Syria situation. There just doesn't seem to be anything in the way of this market that's going to derail it until the end of the year. So what we're going to continue to do is rotate through sectors, try to find relative strength, and we'll keep delivering those trade ideas to you via the Off the Charts newsletter and in the morning call and our morning note. We'll go ahead and take a look at the chart of the spiders to get a visual of today's action. As you can see, we got that big sell-off last week, last Thursday. It was erased very quickly, and then it seemed like just a matter of time after we took those losses back. It seemed like just a matter of time before we made new highs, and that's what happened. We extended to new highs, and we haven't looked back from there as we've closed basically on our highs the last 2 days, extending higher. It's hard to buy on the third or fourth day up at new highs, but we are continuing to see clean setups, clean breakouts in a lot of sectors, and I'll go through some charts of some stocks that we've highlighted in Off the Charts, highlighted in morning calls, and then I'll go over the stock that Mark highlighted as his trade idea of the week on Monday. But we'll start with Pandora. Pandora is one that was on Off the Charts. It's one that has had a volatile range in its upper level range, but nonetheless it's held higher. You go take a look at the chart. Be better that way. You can get a visual of it. Pandora, we talked about volatility. This is the day that everybody was downloading the new Apple operating system that has the Apple iTunes Radio on it, which is a competitor for Pandora. Led to like a 10% drop, I think it was, in one day for Pandora. And it's continued to bounce around in that range. It came all the way back down to the bottom end of that range, but held this gap. We talk about the importance of holding gaps. It can bounce around all at once, but as long as it holds that gap, it's going to stay intact, and that's what happened. After staying in that wide range for a period of about 2 months, finally got that breakout after we listed it on Off the Charts. Really nice extension today. Our target on the trade idea was 32. The high of the day was 31.94, so we'll probably go ahead and take that off the watch list. A really nice extension for Pandora. It could continue higher, but this is one that I wouldn't hesitate to take profits on. Really nice move. Western Digital, WDC. Really nice extension yesterday, and then today when I was doing the morning call a little bit late, I talked about how the stock had seen some weakness in the morning, which wasn't exactly what you want to see, but the key will be how it closed. And when you have a swing trade idea, obviously it's all about the close. And today, Western Digital, after coming back down and pairing almost all of, not almost all, I'd say 3/4 of yesterday's gains, it bounced back up towards where it opened for trading today. So constructive to see it bounce there. Not exactly constructive to see that big wide range intraday, but all in all, after that bounce in the afternoon, Western Digital still healthy, could see more upside. Procter & Gamble, we talked about sectors that could benefit from dovish monetary policy over the next few months. I talked about the utilities. I talked about the home builders. The consumer staples are another one of those sectors that a lot of those stocks have high dividend yield and thus are going to benefit from low interest rates, low bond yields. And Procter & Gamble, talk about consumer staples, it is the staple of the consumer staples. And today, this is one that we listed on Off the Charts last week, I believe. It's one that today continued to extend. So 3 or 4 days up, a little bit hard to buy after this, but we're seeing these stocks move towards our targets from Off the Charts. NOV, National Oil Well, gapped up and closed a little bit off its highs, but you could call it a gap and go a little bit. Held higher, held the gap, which is constructive to see. Just another one that's extending from Off the Charts and looking healthy. I wouldn't call by any means today a topping tail, just a sign that maybe the stock needs a little bit more time, a little bit of rest before it really accelerates higher again. We go to Boeing. Boeing's one we listed, I believe, for the first time on Wednesday out of this upper level pattern. It's a stock that was on Scott's 2013 thesis blog that we publish at the beginning of every year. And it's had a huge move from there, but then more recently we highlighted this upper level. Had a gap and go to the upside, formed sort of an ascending upper level base, allowed the 8-day moving average to play catch up with a little bit of rest, and then boom, another breakout. So constructive action there on Boeing. And then Mosaic, another really impressive move today. these ags. I like the ags. I like the fundamental story, and then technicals have also started to look a little bit better after these went through some tough times at certain points this year. As you can see on the weekly chart, Mosaic's got a lot of room to the upside. This day was the day I believe that it could have been earnings, but there's been all kinds of stuff with the potash producers. Talk about international cartels breaking up and causing higher supply in the potash business, and Mosaic is exposed to all that. So they've had some volatility this year due to the headlines, but after that big down bar, the stock has been slowly trying to reclaim some of those losses. And then go back to the daily chart. What we liked is that it has sort of a lower level, mid-level base here, a longer term base, and then it had broken above that base and then put in a really tight bull flag. And then today we got that acceleration out of that bull flag. So this trade idea is in motion on its way to our targets. I'll talk about a few stocks I talked about this morning in the morning call for some short-term opportunities. We talked about JCPenney. Last night, David Tepper, Appaloosa, as his hedge fund, disclosed that they had a stake in JCPenney, had built a stake in JCPenney. And today, taking a look at the chart, was really strong, sort of the late morning. When I came into the morning call, the stock was right about where it opened. But you zoom in a little bit more, you can see basically, it opened slightly higher, opened up about 1.5%, pushed all the way up. The high of today was 932, but then it retreated a little bit, which is not exactly what you like to see, but sort of like we saw, I can't remember what stock I was just talking about earlier that did this, maybe NOV, that it's not a topping tail. It's not a sign that it's going to correct. It's not a red dog reversal, bearish engulfing day or anything like that, but just a sign that JCPenney might need a little bit more time. But it is a highly shorted name that could trigger a short squeeze, so I think it's one that should definitely continue to be on your radar. It's sort of like the Carl Icahn effect when he bought Netflix when it was down in the $80 area, something like that when he bought it, is that when you have a big hedge fund manager, someone who's really highly respected, like a Carl Icahn, like a David Tepper, when that person gets involved in a stock that has a lot of doubts, a lot of anxiety built into it, like you have with JCPenney, it sort of becomes a self-fulfilling prophecy for the stock, is that just the psychology of it makes it so investors are a lot more confident investing money. It can help turn the business around and buy them more time as they have better access to capital and things like that. But in general, JCPenney has had a big move off its lows, about a 50% move off those lows of $6 and change. So it has had a big move, but I still think it has more upside based on how you look at what's to the left of the chart. We'll go out to the weekly chart. You can see where it came from. Obviously, it's been a huge move because of how hard JCPenney got hit. But still, when you talk about where it came from just in the past few months, the past year, it's really just spitting in a barrel in terms of the size of the bounce so far. And then I also talked about the basic material stocks. We also had David Tepper's Appaloosa and also Leon Cooperman's Omega Advisors disclosed that they had built a stake in Freeport-McMoRan, FCX. Take a look at the chart of FCX. And in addition to, I'll go to the daily chart. In addition to looking for a potential move in FCX today, I talked about the potential sympathy trade and the confidence that that investment would breed in the basic materials sector as a group. And so I talked about FCX. FCX opened only modestly higher after that disclosure, but then extended higher during the session. U.S. Steel had an even better setup as it was just below highs, but it's another one like some stocks that we've seen. Closed a little bit off its highs today in a quiet Friday session, but nothing to really cause you any concern. And I think this one could continue higher. And then I talked about CLF, the iron ore producer. Also closed off its highs a little bit, basically just reclaimed the losses from yesterday, but constructive to see this base a little bit above its 8-day moving average. So we'll see if these can get a little bit more juice next week. And then Baidu, Mark Sperling's trade idea of the week. This Monday we talked about Baidu. It was one that, what we want to try to avoid in a market that was acting a little bit choppy over the last couple weeks was chasing highs. We have seen some clean breakouts to new highs in stocks, but this Monday we elected to go with one that had a little bit of a lower level pattern, more calculated type pattern. It was a little bit off of its highs. And that's what we had with Baidu. And what we talked about in that trade idea of the week, we talked about this descending channel, this steep uptrend that has been in place with Baidu. And what descending channels downtrend, I misspoke a second ago. What downtrends and descending channels allow you to do is have a more calculated entry into a stock and have really tight risk management. So what we talked about is buying out of this downtrend descending channel and putting your stops at the low of, I believe it was this candlestick right here, back from November the 8th. So a descending channel is obviously bearish until it breaks to the upside. But when a steep descending channel like this breaks to the upside, it can definitely trigger some major momentum and really change the momentum overall in a stock, and that's what we saw with Baidu. It did have a little bit of a rough go of it, opened down on Wednesday, but then was able to come back, finish positive, and that's what really gave confidence, and that could have been another entry if you weren't involved from the trade idea of the week on Monday. This negative to positive trade was a very constructive day for Baidu, and it led to 2 impressive days higher. And so our target on this trade idea is back up here near highs, but depending on your own time frame, risk parameters, you could look to trim and trail a little bit of this position. A couple other things to note today: the 3D printers, VJET, absolutely on fire. I mean, it reported earnings, I believe. It was up 9% pre-market. I don't know the actual percentage that it ended up today, but I would imagine it's 9–10% up. And these 3D printers just keep on going and going and going. You don't ever want to try to be a hero with these stocks, especially going into earnings. We have the rule, no taking equity into earnings, and even an options play, you're looking for downside in these types of stocks that, they don't make a ton of money right now. It's a huge growth story, but there's obviously very high institutional, big money interest in owning these things. And so you never try to stop a moving train. You don't try to catch a falling knife. Both of those hold true, and they never held more true than with these 3D printers. And VJET, right now, tough to buy up here, though, as well, in terms of how you should approach these types of stocks. If you're a short-term trader, they're providing great two-way action. Mike Lee, Steve LeVay, and the Trade the Morning mentoring room at T3 Live have been all over these 3D printers, and these will continue to be a favorite as long as they get these really nice percentage moves. And then DDD, the leader in the sector, just keeps on going and going and going. Everyone's looking for the big pullback here. You probably got a lot of people trying to short this stock, which is one of the reasons why it's able to continue higher, because when you get people shorting, they provide the fuel for the extensions higher and that capitulation type move. The capitulation hasn't come yet, but when those shorts have to cover, that's when you continue to make new highs in these stocks like Triple D. I do think it's extremely overvalued. I do think at some point it will pull in a little bit, but look for a red dog reversal type entry, a calculated entry with very tight risk parameters if you're going to be looking for that type of trade. But overall, just very impressive action from the 3D printers, and VJET was the standout today along with Triple D. In the virtual trading floor, there's a lot of traders who take different types of approaches, but some people take a very short-term approach. I talked about Mike Lee, Steve LeVay. There's other guys that blend certain approaches. They blend swing trading with some day trading, short-term trading type stuff. So there are ideas that come into the mix in the chat room that are more short-term type ideas that do provide really good percentage moves during the session. They're names that we wouldn't necessarily put in off the charts as swing trade ideas. We wouldn't necessarily put in the morning note or in the morning call as swing type ideas, but they can be unearthed due to the commentary and the VTF, which is what the value of being the VTF is if you take that sort of approach to the market. But OWEN is the name I'm talking about specifically today. Just huge moves. We'll go and take a look at the chart. It's a stock that I believe reported strong earnings, and then there was a Seeking Alpha article came out and sort of naysaying the stock and providing a skeptical thesis on their growth story. But when people really examine the story, I think they realized there wasn't a ton of really concrete criticism that meant a whole lot in that article. So what you saw was OWEN was up huge, made a new high, came all the way back in, almost reclaimed most of yesterday's losses, and then it was able to bounce all the way back to finish with really healthy gains on the day. So a really wild, manic action in OWEN, and I know people in the VTF were trying to maneuver this one. So if you're looking for volatility, it's out there in the market. The indices might be melting up, but individual stocks continue to move, providing really great tradable volatility. A couple other things to note: the banks were really strong today. Another sector that likes low rates. You saw the XLF break above its pivot high, so a key technical area breached here for XLF. We'll zoom out a little bit to see where the XLF is in context, and we'll go out to the monthly chart. As you can see, a really steep uptrend. There's been a little bit of choppy type action in the banks recently, but the XLF is a little bit diversified among the banks and some other financial stocks, and overall that uptrend has remained intact, that macro uptrend. You go take a look at the chart of some individual banks. Bank of America is one that not on its highs the way the XLF is, but you zoom in a little bit, you can see Bank of America is among the strongest of the banks, and this week a really nice igniting weekly bar to get to the top end of this range that's been in place basically since July. And then you zoom in even further to the daily chart, you can see that strength. Broke above this pivot back from September. The pivot high was 1483, so we closed at 1492 today. Really nice to see that. Would be good, would be healthy for the bulls to see an extension above that pivot next week. So they won't want to see Bank of America close back below it, and I don't see any reason why it would. JP Morgan is one that's gotten dragged through the mud, accused of just about every fraud and securities violation and predatory lending and all that type of stuff. But the stock continues to shrug off those pieces of news and actually take that news as a positive. You had all these things hanging over the head of JP Morgan, and people are generally a lot more afraid of uncertainty than they are of just bad news. And when these fines come through on someone like JP Morgan, yes, they're going to be fined a large amount of money and all this, get punished by the SEC. But when it really comes down to it, talk about spitting in a barrel, the amount of money they're having to pay compared to their revenues is pretty minimal. And you look at the monthly chart of JP Morgan, really nice igniting weekly bar, and it just has this monthly pivot here back from July. The high of that is 56.93, so that'll be the level to watch going forward in JP Morgan after some nice action. We'll take a look at a couple more. Goldman Sachs breaking above this week. I'll take a look at this is the daily chart. Had a sort of a tight range that has been in place for the last few weeks. And today tried to push above it, but like a lot of stocks we've talked about in the daily recap, closed a little bit off its highs, so maybe just needs a little bit more time. Market a little bit tired after a few days up. And then Wells Fargo is the last one I'll look at. Wells Fargo is one I really like. Nice dividend yield, less risky, less risk-taking bank than a lot of the other ones. Maybe doesn't provide some of the volatility and maybe some of the upside, but I think there's a lot of positives to owning a stock like Wells Fargo. And you zoom out on the weekly and monthly chart on that. Sort of similar pattern to Bank of America, a little bit off its pivot highs and similar pattern to JP Morgan, but overall very healthy, not as volatile action in Wells Fargo as you've seen in a lot of the other banks. But that'll about do it. We ran through a few symbols there for you. Really positive week in the T3 Live community with, I think, subscribers and contributors were all over a lot of this action, and we obviously were able to provide some really nice trade ideas and off the charts. Mark Sperling's trade idea of the week was really turned out to be a great idea, and I think we've had some good commentary in the morning note and everything like that. So if you're not on any of those newsletters, the free ones, Mark Sperling's trade idea of the week and Scott Redler's morning note, definitely hop on those. There's no risk whatsoever. They're free. And then off the charts, $30 a month, $1 a day for this product. It's really unearthing all these terrific ideas. I think it's definitely a huge value, a great opportunity to get some more ideas in the mix in your arsenal. Maybe not all of them are for you. Maybe some of them are ones that you're not going to play, but you only need one to make money. And we've unearthed a few really nice winners in our off the charts newsletter. So I definitely take a look at that product and see if it could generate some value for your trading. But this has been John Darsie here for your daily recap. Have a good weekend. We'll see you back here on Monday morning for the morning call.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.